Hey there, everybody. Welcome back to our weekly market insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. I've got a lot of news for you today, so let's get to it. Markets kicked off the week in a cautious mode, with investors keeping a close eye on two major events: the U.S. general election and the Federal Reserve's benchmark interest rate decision. Once the election was decided, stocks gained and treasuries tumbled as investors are closely analyzing the implications of the new administration's policies on the economy and financial markets. The Federal Reserve cut interest rates by a quarter point Thursday, extending efforts to keep the U.S. economic expansion on solid footing. Officials voted unanimously to lower the federal funds rate to a range of 4.5% to 4.75%. Slower inflation and a cooling job market paved the way for the decision. U.S. factory orders fell for the second straight month in September. New orders met expectations and declined by 0.5% during the month after falling a revised 0.8% in August. Orders, excluding transportation, inched up 0.1% from a 0.2% loss in August. Factory orders were unchanged from a year earlier. The Institute for Supply Management reported on Tuesday that economic activity in the services sector expanded for the fourth consecutive month in October. The services PMI reached 56% during the month, a 1.1% increase from September. It was the highest reading since July 2022 and marked the eighth time the composite index has been in expansion territory this year. The employment index fueled the service sector's growth after landing in expansion territory for its third time in 4 months, with a 53% reading, a 4.9% increase from September. The business activity index fell 2.7% to 57.2%, while the new orders index decreased by 2% to 57.4%. Mortgage demand fell for the sixth straight week after applications crashed by 10.8% during the week ending November 1st. Purchase applications declined 5% from the previous week, but were still 2% higher year to year. Refinance activity crashed by 19% on a weekly basis, though they remain nearly 50% higher than in the same week last year. The volatility in Treasury yields drove up the average 30-year fixed to 6.81%. U.S. worker productivity grew less than expected in the third quarter, contributing to a firm gain in labor costs. U.S. non-farm productivity grew at a 2.2% rate in the preliminary third quarter report. Unit labor costs increased at a 1.9% pace. On a year-over-year basis, productivity increased 2% in the third quarter, the slowest pace in over a year. Unit labor costs were up 3.4%, the most since the end of 2022. Applications for U.S. unemployment benefits ticked up last week, but layoffs remain at historically low levels. The Labor Department reported that initial jobless claims increased by 3,000 to 221,000 for the week ending November 2nd, less than the 227,000 forecast. Continuing jobless claims increased by 39,000 to 1.9 million for the week ending October 26, the most since late 2021. In international news, the Bank of England cut interest rates by 25 basis points to 4.75% on Thursday. The widely expected move was the central bank's second rate reduction of the year after it began its easing cycle in August. Investors do not expect any further rate cuts this year after the central bank stated that it expects inflation to rise again in 2025. Well, that's it for this week, everyone. Thanks for joining me, of course. And if you like this video, please hit that like button. And to be notified every time we upload a new video, please subscribe. Your support of the channel is greatly appreciated. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a great Friday today, but an even better weekend. Buffy, out.